Is China's export boom enough to rescue its slowing economy? Despite a surge in overseas shipments, the latest data suggests the answer may be no. September retail sales in China are expected to have grown by just 3%, signaling a sluggish domestic demand, even as exports remain strong. This divergence highlights a key concern for global markets. While China's manufacturing power continues to support its trade partners, internal consumption appears to be losing momentum. For investors, slower retail growth could mean tempered optimism about China's role as a global growth engine, potentially affecting everything from commodity prices to multinational earnings. Looking ahead, watch for how Chinese policymakers respond. Will there be fresh stimulus or policy adjustments to shore up consumer confidence? Let's move to our second story. Oil posts third weekly decline on concerns over global glut. Oil prices have dropped yet again, making this the third consecutive week of declines. The main driver: mounting fears of oversupply as the market heads towards a surplus. Additional pressure comes from ongoing US-China tensions and wider geopolitical uncertainties. For energy sector investors, this trend signals increased volatility and uncertainty in the months ahead. A prolonged period of lower oil prices could impact everything from energy stocks to emerging market currencies that rely on oil exports. The key indicators to monitor will be OPEC's next moves, inventory reports, and any shifts in demand from major economies. Turning to our third headline, US-China talks planned next week as Trump plays down tariffs. High-level delegations from the US and China are set to meet in Malaysia next week, laying the groundwork for a potential summit between the two presidents. This development comes as President Trump publicly downplays the impact of tariffs, suggesting a more conciliatory tone amid ongoing trade tensions. For markets, these talks represent a critical opportunity to reduce uncertainty and perhaps chart a path away from escalating trade barriers. The outcome could influence not only investor sentiment, but also future policy decisions across a range of sectors, from technology to agriculture. In summary, China's mixed economic signals, falling oil prices, and renewed US-China diplomatic efforts are all shaping the current investment landscape. The interplay between these factors will be crucial in the coming weeks. Investors should keep a close eye on policy responses, market reactions, and further developments in US-China relations.